welcome back. This is another episode of Stock Market Review. Today we have a lot to talk about. The day has come, it has finally happened. The Fed has cut interest rate, which is what everyone is calling more like a hawkish type of cut. Meaning they cut, but they did also announce that they are currently they're going to pause. So we're gonna get into that. And as usual, we will dig in and go over the S&P 500, the Nasdaq, the Qs, the VIX, Bitcoin, and ETH. But right before we start, guys, I have to do that. Anything I say here is not in suggestions for you to buy, hold, or sell. I am not a financial advisor. Make sure you do your own research. What I do, there's no fluff here, there's no emotion. I look at the chart and then I'm giving you probabilities of what may happen, what I might do in the market, but anything I do is not me telling you to either buy, sell, or hold any assets. Just understand trading carries a lot of risk. You might experience some loss of capital. So do your own research. But if you don't know exactly what to do or how to look for things, you at the perfect spot because down right here, what we do exactly is look at the setup. That way, you'll start familiarize yourself with specific setups to try to maximize your gains. If you hear from me already, make sure you smash the like button, subscribe if you have not, and hit the little bell. That way, you will be notified anytime we have anything coming, whether it's a new video. If it's not a new video, maybe it's if we're going live, that way you can get that notification, so you can always be in the know. Just to start with, what happened today, right? So the Fed cut interest rate. The market loved it, but they didn't. The market didn't like it simply because we cut interest rate. I believe the Fed cut the 25 basis point was already priced in coming in. We were sitting almost at all-time high in the S&P. You can tell that was already probably priced in. So now, why the market liked that so much and pushed up? We got some unexpected news. That's what happened, right? What happened? Powell also announced not only they are going to start doing, he doesn't want to call it QE, quantitative easing, but when you injecting $40 billion in liquidity in the market, that sounds a lot like QE to me. If it sounds like a duck, it quacks like a duck. I can guarantee you it's not a cat. All right. So it's $40 billion. And the biggest surprise, we were all expecting that the Fed will start actually putting that liquidity in the market in April of 2026. They will start this month, which was a big surprise to every person. Everyone was surprised by that. No one had them doing that this early. And the rationale behind it, what he said, again, I don't know exactly what they're looking at. They are estimating that the job market is a lot worse than we think it is. They think on any numbers that has been reported in the job market, at the bare minimum, we are overstating about 60,000 jobs more than we actually have. So, say I don't quite remember which month we had about 20,000 jobs added. So that means we actually lost 40,000. That's what he's talking about. So that's the model they are looking at. I know what I'm saying. It is a bit of a hawkish cut, which was expected. However, when you say you're going to inject $40 billion of liquidity in the market and pretty much almost like right away, that's pretty dovish to me. And of course, there were some dissents. Some people didn't want to cut; they wanted to hold. Then we have that one guy that always wanted 50, 50 basis points. Okay, well, that's enough for that. What we're going to do right now, regardless of what these guys do, the one thing I keep telling you guys, the chart does not lie. All right, let's dig in the chart real quick. The chart does not lie. The chart will never lie to you. Let me pull up. My watch list, and let's go in the spy. I believe today we tapped almost tapped, or did we? No, we almost tapped all time high in the spy. All time high is right at 690, right at 690. That's all time high. It's so interesting, right? I believe yesterday, when I was doing the episode yesterday, I had a level drawn up saying, hey, we might come down. Let me see if I go in the 2 hours, you guys will see it. Something about, hey, this is the way I see this playing out. It seems what may happen is we might come down a bit and then curl back up. And it played out perfectly like that. It played out perfectly like that, which is good. If you look at that, again, anytime I see those patterns, I will call them out for you guys every single time. So that way, that's something I want to ingrain in everyone's head. So that way, whenever you see them, they are familiar to you. Um, I am going to let's check a double bottom. Let's see exactly what a oh, sorry, I put a double top. We are looking for a double bottom pattern. That's what that double bottom looks like, right? It looks like that. You can see it. If you want to see it in a chart, it would look sort of like okay, this is not showing up very well for me. Okay, maybe okay, maybe that looks a little better. Let me try to zoom in just a little bit so you guys could hopefully you guys can see that a little better. You can see that here, and so if I come back right to that level, right, and this is where things get interesting with trading. When you start predicting certain specific moves before they happen, yeah, that carries risk, but you got to be strong, man. That's why you have to know your levels. Your stop losses needs to be tight when you trade like that, specifically if you trying to do something right at that level. If you're taking that trade, you got to put your stop loss, pretty tight because for most people, what they would see when something like that is happening, because inside of every single move that you see, the other part of that is there's a I would say there's the opposite side of it, right? Because somebody it would have been perfectly okay if somebody thought this was just doing that, okay? That would have been perfectly fine if that's what someone thought. But at the same time, given that's when it comes to understanding which phase you are currently in the market, right? Understanding which phase you are in the market. Are we somewhere in the market where we've been consolidating? Is the conditions a bit more bullish? Is there any news that might come out that may help push the market up? Like all these things come into effect, right? And one thing we all know, there's no way the Fed was going to come on the same day, the last day before Christmas. No, no Fed governor going to want to come in or Fed chairman to come in and drop the market and mess up the like that rally, that center rally. No one will do that. So that's the condition we had. So we came here again. We did that pullback as expected, and we popped up. Now this is where it gets interesting, right? At that level we are currently, is this a trap or are we really going to take off for all-time high? Okay, everyone knows I have been pretty bullish in the stock market, especially the SPY. Everyone knows that my prediction for end of year is still 7,000 or 700 in the SPY or 7,700 in the SPX, the S&P 500 index. This is where I have a little problem. um, when Powell talked about the economy is really suffering and things like that, let me just remove that so we can really focus on things. I could just talk to you guys, right? When Powell really talks about how bad the job market is and things like that, they cut, they cut even though they see inflation is rising. Now, The only way for them to cut while inflation is rising is if they see the job market is really shaky, because that's the two mandates the Fed has, right? Is to inflation, manage inflation, um, and manage the job market, the labor market. So if they cut anyway, while inflation is rising, inflation is always the biggest thing for them. If they cut anyway, that means what they're seeing is bad. And again, that part when he said he thinks they would, from the numbers they are seeing, we are overshooting about at least 60%, 60,000 jobs a month. That means all the numbers we've seen when Amazon announced they are cutting 30,000 jobs and this company doing this and all these things and whatnot. What he's saying is it's actually worse than what we think it is, right? Okay, so now let's get right back in the chart. Okay, this is where we are. We still at a. You can see what we did for the day. We bounced down, came to that level of support that we already had since the previous day, and then we bounce. Right? That's a very nice candle. You can say all this here, this could all of that. You could say just take out all these days, all these 4 days. So now we have an engulfing pattern, which supposed to be very bullish, right? Very bullish. It's an engulfing pattern. And then look at the volume, guys. Let me just move the chart just a little bit so you can see the volume show up. You can see the volume here. So volume rising and all of that, which is all great, right? Nowhere near the volume we had these days, right? But these are all great. However, the issue that I have is when we have an engulfing pattern it's where it's happening, right? All those patterns, it's all about where exactly are they happening. So if we're looking at where is this happening, it's happening without a strong resistance level, which is the all-time high resistance level. So I'm a little iffy about that. Um, that's one. And the second thing, a lot of times the market takes a little time for it to digest where exactly things are going to go. I would not be surprised if we have a red day tomorrow, and then on Friday we pop right back up. So it's going to be a bit volatile the next for the rest of the week. Be prepared for that. All right, be prepared for that. Trade. Keep a cool head with your trading. Don't trade on emotion. Don't just say, "Hey, this is gonna happen." Find specific levels. So if it gets to your level, you need to buy or you need to sell or whatever it is you need to do. Right? If you're doing things at the levels that you want to do them, that's perfectly okay. That's perfectly okay. There's nothing wrong with that. And if we still take a step back on the border macro on the macro level, looking at the daily, right? We still have that pattern that we have here, which is the head, inverted head and shoulder pattern, which is supposed to be a very, very bullish pattern. But the Fed doing that QE, even though they don't want to call it that, I think that's great. That is really really good news. Now let's see. Let's go in the 2 hours. Let's see what we did in the 2 hours. All right. Let's break that up. Let's break that. Okay. Let's see here. Boom. You can see what we pretty much did all morning and whatever. Did that pull way down, and then we popped. Okay. I mean, this is the beginning of the day right here. Just went way down to go and check and bounce off that support level pretty much and then pop. Right now, what we're doing as of right now, it seems like what we're doing as of right now is what, guys? What? You should know this as soon as you see it. Seems like we're doing, let me make sure I do that a little bit better. Let me just take this instead. You're seeing we are doing a what? This is a so far, I'm not gonna qualify that as a bull flag so far, right? But I just wanted to stay like right here, okay? or at least as the I have this. So this is that orange line, the orange line or the orange line that you see. That's the VWAP. At least I want it to stay right at the VWAP. If it wants to come down a little more or bounce right on top of this level, just bounce right there. And if we look at the double bottom pattern, so that's what considered the neckline, right? Sometimes once we got out, we pop. We a lot of times what we do a little bit, we would might come back down and consolidate or retest the neckline before we eventually pop. Okay, but at the same time, as I keep saying, do not forget the current phase we are in the market, right? We are at all-time high, so even though we just got a double bottom happen, it does not carry as much weight as it would if that happened as at a support level, right? You have to take all these things into consideration. Even when you if you trade fully technical person, even if that's the way you trade, you still have to keep in mind of these levels. If we look at let me just go back in the 2 hours just real quick. The one other good thing we're looking at, we actually we went positive in the MACD and we course up. We can see we're moving up, which is great. If we look at the 30 minutes, this is what I don't like. So this is after hours. So the market closed here, right? The market closed here. After hours, it seems like we giving back almost everything we got today. We deep in the red right now, but hopefully all it's doing, this is after hours. It's just doing that, and then tomorrow we start rising to go back up. All right, that would be a nice move. I would really like it because right now this is the so you can see that level that I have here because right now this would be our current support level. Okay, this is why I'm saying this needs to hold. Why? Because we had that level that was right here. Let me just take this off the chart to make the chart just a little bit more clean for you guys, right? So we had this area of support here. Then it finally dipped below, right? Now we push back up again. So we sort of like want that to really hold so it can move. And for those of you who trade just a little differently, I guess you could say what in the 30 minutes what you're looking at is a cup and handle pattern, right? Cup and handle pattern. This is why it's good. It's good to know your patterns. And a cup and handle pattern is a very bullish pattern as well. So it's always good within certain patterns that you also seeing other bullish pattern form in the lower time frames. So if the 30 minutes is positive, the 2 hours is positive. As of right now, it's still positive. The only thing with the 30 minutes, we can see the MACD is overextended, so most likely we might get a bit of a pullback, right? But hopefully, or maybe just best thing that could happen, it just stays right around this level and it just consolidate here instead of actually doing an actual pullback for the MACD to come back and do this. If it can just consolidate there, just go down a little bit and pop back up, and the MACD would sort of like correct. Because right now we're a bit extended in the 30 minutes. If you're looking at the 1 hour, again the 1 hour is looking not very. I mean we're still above support level. But I'm talking about the MACD specifically. The MACD does not look very good. All right. So that's what we have in the SPY. And the good news with that is, and there might be a few bears that's still holding on, thinking, "Hey, we might have a shot." I know they got us because if you look at what happened here, right? All the people who decided to short say, "Hey, seems like the market is going to crash. We're going to short it." They all trap. They all trap. And guess what happens when you short the market? How do you get out? That's why you get that big push up there. The only way to get out is to buy, right? That's how you close a short position. You have to buy it back. That's how you close it. So they had to buy, and that pushed things up. What I'm actually hoping is that maybe there's a few big short sellers who has not closed yet, and they have to close tomorrow. So if we get another push tomorrow and those guys start closing, this is how you get those short squeeze. And a short squeeze at this level would be great. That would be, it would build confidence in the market. Think about even yourself, right? How more confident would you be if we come in tomorrow and the market is warming up? Maybe we up like 6 7 points, early in the morning, we up 6 7 points. That will give confidence, and that would get a lot of cash off the sideline and into the market, right? So this is where we are in the S&P. We still look good. I'm looking at what I do. I'm not being bearish, guys. I'm just very cautious. Whenever I get to some sort of resistance area, I get very cautious. That's just my trading style. That's the way that I trade. Is the same way when some of you might thought I might have lost my mind a little bit when we were down here on that day, right? When we came down here on that day, I was cool as a cucumber. When we came down here on that day, I was a little worried, right? But I still said, hey, support is holding strong. I'm still bullish. I actually bought calls. I bought calls on the SPY both of those times. Why did I do that? Just to revise that for those of you who did not see those videos, I did that specifically because if you look at these drops here, right, that was a support level for me. That's a support zone. Oh, okay. Let me just do that. Yeah, that level right there was a support zone for me. So when we came in here, I felt confident, to buy it. That's the reason I felt confident to buy it. So it's the same way. I get very confident when I'm at support level, and I get very shaky whenever I get to resistance level. That's just my trading style. Maybe that's not what works for you, but that's what works for me, and I like it. It's been working great for me. If I see resistance, I just want to run for the hills, man. That's just the way I trade. Now let's go in the queues, right? Let's see what our good old Nasdaq is doing. The Q sort of did the same sort of pattern. Let me take a quick peek here. Yeah, same sort of pattern the Qs are doing. Only difference is there's a sizable gap between the all-time high. I mean, on the SPY, all-time high was like maybe like 1 point away. We have about an 8 point gap for the all-time high in the queues. So we have a lot more room in the queues, and I think so. This is where sometimes I give my opinion. I do have biases. We all have biases, right? This is where I can share my bias with you guys as far as what I think might happen. The S&P, quite frankly, has been outperforming the Nasdaq over the past couple of weeks. And the reason for that is when you talk about, oh, the cyclical, there's a rotation into value and yada yada and this and that. When the Fed says they're going to pause cutting rates, that means people no longer are going to be chasing small cap, right? Small cap flourish on borrowed money. Borrowed money is better for them if interest rate is cheaper because it costs them less money to borrow. That's if they have to do any sort of projects, right? If these guys have to do any sort of projects, if they want to invest into any new technologies or whatever, most likely they have to go and borrow that money. The difference with the Nasdaq, those companies have a ton of cash. Look at how Nvidia literally becoming a bank, just lending people money. Hey, let me get a piece of your company, and I'll give you $10 billion. Why? Because they have a lot of cash on hand. So interest rate does not really impact the Nasdaq, those companies, that much because they don't really need a bank. Most of them, they have cash on hand because they're making so much money. Their margin is a lot higher. So, for example, if I want to give you guys an example, let's say you have a company that makes uh, they just make shovels, right? Just an example, right? You make shovels. Let's say cars. Okay, you sell cars like GM or Ford or whatever. That's not small car, but I'm just giving you an example. Cars, it costs a lot of money to make a car. And every single time you build a new car, it doesn't cost the same. It might cost you more money, right? If there's a shortage, tariffs, all these things happen, right? Now, take for example Google. Let's not say Google. Let's say Facebook. We all know Facebook. Facebook is the platform. The initial investment is the investment. The platform is already there. Yes, they have to update software and whatever and stuff like that every now and then, and they have to manage it, but they don't have to build a new platform every time somebody has to use it, right? So those companies have a bigger profit margin. The initial investment is the big operating cost, so they don't borrow money as much. Anyway, I just wanted to give you guys that perspective, that clarity, that difference between the two of them. And this is why I think, in my opinion, I think the Nasdaq is going to come back into play again and start outperforming the S&P again. And the reason why is that, again, as I'm saying, is because the Fed is going to pause cutting rates. Obviously, that's until Jerome Powell has served his full term. Once Jerome Powell is gone, that's probably going to change. Okay, now let's get into the chart. Enough talking about all that stuff. If we get into it, we can see what happened. See, okay, that did not give us the same pattern as the S&P did, right? The S&P gave us a nice double bottom that was clean and you can see it and whatever. There was no ifs and buts about it. You can just see it. Difference with the Nasdaq. The Nasdaq also did come to support level, right? So you can see that here. Let me do that. So you have this area, you have this, you have that, and that was today. So if you drawing that, you can literally see we had support right here. And what did it do today? It dropped to support and then it bounced. It did not give the same type of pattern as the SPY and whatever, but needless to say, at least it did go to support level. So if you trade support and resistance, you're waiting to buy things that support level. That would have been a good trade for you. So that's the way you could have simply trade that. Now, if we're looking at the after hours, does not look pretty in the Nasdaq, right? The S&P, we still above the VWAP and we still above, I think, this level here. However, the Nasdaq seems like it's completely giving up. You see that, Riley? That's completely given up. This is more than 50% of the move. And whenever the market has pulled back more than 50% of the move, this is like that things gets a little murky. And by the way, guys, I'll just remind everyone again, get those likes up for me. If you here, please smash the like button, share the video with somebody else that can take advantage of those type of reviews. Thank you for tuning in. Again, if you got anything else, if you took anything else from the meeting that we had today from the Fed, feel free to let me know. Drop it in the chat and let me know. Once again, I do have a community on WhatsApp. It's a free community. The link will be in this. I need to stop putting the link in the live actually, but the link will be in the video. That video will be posted live after. Click on the link if you're watching that after the live. Click on the WhatsApp link so you can join the community. I would love to have you in there. And last thing I'll check, I'm running out of time a little bit. Just sorry about that. For those of you who are part of the community, that will be in the call after that. Sorry about that. I'm running just a little bit behind. I just felt like I had to cover certain things because I don't like just doing things. I don't like doing things halfway, man. You know, anything you do, you gotta commit to it and do it fully. So we're gonna let's run through this, right? We're going to take a quick look at our good friend Bitcoin. Unfortunately, Bitcoin has given up the level we had. This is the same level, right? We closed above it yesterday. It acted like you wanted to push up and it's giving it up. Now, this is what I'm afraid of with Bitcoin. If you look at that, right? So this is why we don't know. Is this a trap yet? We do not know. What are we seeing here? This, we covered that pattern yesterday, right? This is a double top. See, I just talked about a double bottom in the S&P. As of right now, this is forming a double top. Is that double top going to fully form and continue, or is that support level going to hold? I don't know, but as of right now, this is what I'm seeing. That's the potential of what might develop, right? That double top might develop. But as of right now, if we do our trend line, we're still positive. Like the macro, on the macro level, we're still positive. You can see we're still above that trend line. We haven't made a new low. We haven't even tested this low, right? So we're still positive here. Uh, if we check ETH real quick, I really don't like the way ETH is looking, because ETH looks like it's giving, as of right now, it's giving an evening star pattern. And on top of that, it's literally right now it's back below the trend line. So that's the problematic part. And if we go and look at the evening star pattern, right? This is why you got to know your pattern. This is what we're looking at right now, right? Evening star pattern. This is it. Bullish candle, doji, or a reversal candle, and you get a bearish candle, right? And if we go, we're looking at here, what do we see? Bullish candle. We have that doji, long tail doji here, and now we having this showing right here, right? But we would need this to close at least 50% below this candle, because if it doesn't close below 50% below the body of this candle, it does not consider an evening star. All right. So right now we're fighting. Hopefully it bounce back. It bounce back up. It gives a big, wick at the bottom. It bounce back up because we've been having those long wicks lately anyway. All right, guys. That's about all I have, guys. Thank you for tuning in. Again, I'm going to say it again. Please support the channel. Thank you for coming in. I will have some links in there. You can please share the channel. Drop me some comments. Let me know what you think. If you have any suggestions or anything else that you are currently seeing, feel free to let us know. If not, I'll see you guys tomorrow. Remember to smash the like button, subscribe, and hit the little bell. So that way, next time we go live or next time we have a video, you don't miss it. We're dropping gems on these videos every night for you guys. Again, thank you for tuning in. I'll see you guys tomorrow.